tax treaty does is, one, it reduces the level of double taxation. What it means is, and it also reduces the rate of withholding. What it means is, for example, these management fees that I was talking about, if you were to make a payment to a Canadian and they were not a treaty country, it would be 33 1/3. By virtue of them being a treaty country, it drops to 12.5%. So by us having a tax treaty, it reduces the level of withholding tax, right? Now, what also happens is, based on the treaty, Canada determines how they're going to tax that. So it's Canada that will say, you are a resident in Canada receiving money, you have paid 12.5% in Jamaica. It's Canada that then looks to see, do I give a credit for the 12.5 or do I make it such that the 12.5 is the only tax you pay? So what a tax treaty does is it reduces your tax and it prevents you from having double taxation. Because Canada cannot come back and tax you the same time on the same income without giving you a credit. That is against the rule. Okay? Clear as mud? The U.S. treaty, we tend to do a lot more things with the U.S. Particularly, you know, you hear these things about withholding taxes and whatever. The U.S. treaty is a very good treaty because the management fees, so certain fees that are paid, there's zero withholding on it. So they get away. You notice the difference? They have negotiated an excellent treaty with Jamaica. They also have some differential depending on dividends. So if you were to buy, invest, you know, like you have a stock market money and you're going to put some money on Wall Street, the withholding taxes are interesting for the U.S. So you see the lower tax rate applies if you own 10% or more. So if you're just a passive investor, 15%. If you are a 90% investor, 10% withholding. It flips for Canada. Canada and the U.K. almost have an identical treaty.
I have a question. I know you're asking this question, but since it's very technical. How do you treat dividends, interest, and royalties for non-treaty countries? Because you said from
33 1/3. Everything is 33 1/3. If you are not a treaty country, we have 13. Royalty, every 33 1/3. So if you're not, I've just given you 3 of the common ones, right? Like we have China. I mean, if you go on the internet, you see the 13 countries. However, and CARICOM, we say CARICOM, but there are a bunch in there as well. But if you are not listed, 33 1/3% is the withholding tax, regardless of what it is. You see, if you enter into something with India, 33 1/3%. And you can find yourself in some big trouble if you didn't withhold it, and you can't find them to take it back. Okay, so be very clear when you're dealing with non-residents, because it can get very pricey.